Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street. How's it going out there? It's Wednesday, August 16th, and you're listening to the Wall Street Unplugged podcast. I am your host today, Daniel Creech, Curzio Research Analyst here at Curzio Research. I'm the one that works for, alongside, and behind the one and only Frank Curzio. And hey, just a minute. Look, Frank had surgery a week ago, people, and he's hobbling into the office, and he just can't let the reins go. Frank Curzio, how are you, sir?
I'm doing good. I'm doing good.
He's alive, everybody. He is alive.
I surprised Dan by walking in. He's like, wow, I had no idea. He's like, I'm glad I was here.
Yeah, I was going to take the day off.
That was funny. But yeah, it's just, I appreciate all the emails and everything. Everything is okay. Surgery went well. I'm up and around and walking around. Of course, that talk was like, you can't drive for 2 to 3 weeks. And yeah, my wife was the same thing. You can't drive, you can get into an accident. I was like, if I get into an accident, it's like, I'm probably going to get hurt anyway. It's like, it's something else might break or whatever. So I'm hoping that I'll get to, but anyway, it's very easy to drive. It's, my left, not my right. So I'm not using that to drive. And I'm not doing anything stupid and pushing the issue or anything. But, when you're young, good recovery, you need painkillers, which I have them in me today. So I might be saying a lot of crazy stuff.
Oh, nice.
Which I took one when I came in, not when I was driving. So you don't have to report me or anything.
Oh, but, very good. Yeah.
Yeah. So
hey, with the lag time and actually hitting and affecting your body, you could probably take one 15, 20 miles out and it wouldn't get in your system before. I'm just kidding.
I'm going to try that.
Crying out.
I'm going to try that.
What's that Eminem song? I just drank a fifth of vodka. Dare me to drive?
So it was cool. Today, actually, I dropped my daughter off because they both started school today as well. So that was pretty crazy. My youngest is starting middle school at Bowles, which is like it's set up like a college. You go to different buildings and everything. It's pretty crazy. So she's really nervous. And my other daughter I was really proud of. She's a sophomore and she had problems with a couple of her friends and she just blocked them all and said, I'm not hanging out with them. I don't like them. They talk behind other people's backs and everything. She's like, if I'm looking forward to it. I was talking to other girls. She was so excited to go to school. And I was really proud of her. Just shows good character. A lot of people would be scared to go to school and their old friends are pains or whatever. But she's looking forward to a fresh start. She looked pretty today, both of them. And we start school a little early here in Florida. And then I just came in. Now I'm here. And
happy back to
school
day for everybody.
So when I'm home doing nothing, it's tough. You need to get out of the house. When you're there for a while, I'm not going to lie to you. I think everybody knows what I'm talking about, whether you're a man or a woman, It's, constant all the time. And it's great. My wife is taking care of me and everybody's taking care of me, my kids and stuff like that. But you need to get out a little bit. And when you get bored and stuff, you're doing a lot of research. I've been doing a lot of homework on one particular topic that's been, I feel like everybody thinks they know it, but I don't think they understand the full impact it's going to have. And that's China. And we've seen a lot of news out of China. Daniel, I don't know if you've been following it as much. Again, we're coming in here, we're just going off the fly and different things, and we're going to talk about some of the topics, say, like Nvidia later on. But this China thing's for real. They just lowered rates, trying to provide, less taxes on trading and stuff, trying to stimulate their economy. But it's a surprise rate cut. And when you announce a surprise rate cut as a central bank, you only do it if you're in dire circumstances. Usually you're able to predict it. And I'm not talking about something that goes from 25 and maybe you raise 50 and there's odds against that. You didn't have any odds on China coming in out of nowhere and cutting their rates. And when I looked under the hood and looked in some sites, and it's very difficult to find, but I probably spent about 10 hours in one day. You guys know how it is when you're researching something to death and you don't even realize the time is passing. There's a lot of stuff under the hood, but I don't know if you've been following it and going along. I know there's news in China. Bloomberg just reported how it's a lot worse than expected, but there's a lot of shit going on that I think you guys should know about, because higher interest rates and raising them, Daniel, by over 6,000% in a year. The highest we've ever raised rates and put in percentage terms was 200%. That was a long time ago, I believe. It never even came close to this, right? And there's going to be significant consequences. And I'm not talking about the consequences where the NASDAQ declined for two weeks in a row for the first time this year, or the Dow had 13 consecutive winning streaks, the best since, I don't even know if it was 1800s and stuff like that. But you don't usually see those trends happening when you're in an earnings decline and interest rates are at a 22-year high. You don't see multiples expanding, and something usually breaks. We saw a little bit of the breakage when it came to the commercial banks, and that caught people off surprise. But that's what happens with markets. It's right now, people are like, commercial real estate in China is bad. If you could see it in front of you, you could adjust. You see a recession coming, you could adjust, right? You could fire employees, you could lower costs dramatically, you could, prepare for it. It's what you're not prepared for, and I don't think people are prepared for how bad China's going to get. And again, I know you've been covering it as well and looking at it in some stories, but I came in and said, listen, I want to talk about China. There's a lot of stuff that's pretty crazy I talked about, but I don't know how much in depth that you've been following it.
Not near as in depth as you have. A couple of Wall Street. It's funny you brought that up just because yesterday in the Wall Street Journal, on the front page in the right, it has China's downturn hits U.S. industries, and I was thinking about, for us as individual investors, it's not real easy. It's easier to buy China than it is to short it or try to hedge against it or make money off the downfall. Mm-hmm. And really, I was just kind of thinking out loud about what to avoid. And of course, you can go through different systems and look who has sales overseas and things like that. But a couple of things from the Wall Street Journal, I thought, they talk about how chemical makers and giants such as DuPont and then big industrial machinery such as Caterpillar is getting hit. This is a quote that says, from Rainier Blair, who's chief executive officer at Daner. And it says, or Donner, I'm not sure if I'm butchering that, Frank.
Donner, yeah.
But China orders were down 20% in the first quarter, 40% in the second quarter, but really 50% in June, part of that quarter. And then the Wall Street Journal goes on to say it derives about 13% of its total revenue from China, but it's going to be mixed results. And we've talked about how you can't have levers and crazy stuff done to a system without having crazy results. Mm-hmm. And so you're going to have mixed economic data. And we go back and forth about, hey, inflation is trending down, but you're also going to see strong jobs labor, and you're going to have these mixed economic data. Same thing over in China. So if you're Caterpillar and DuPont and these guys, maybe you're getting hurt. But Marriott reported a surge in China demand. Mm-hmm. Starbucks recently reported a huge demand increase, same-store sales demand increase, and such like that. But these companies, these major companies, Frank, Caterpillar, China accounts for about 5% to 10% of total revenue. But CEO says, quote, we expect further weakness from China, he said. This was just a month ago because all these are, relevant with earnings releases. And the last thing I thought was interesting is it says a lot of European nations are getting hurt because China they pass a lot of products through to China. Mm-hmm. And so this kind of calls out and says, hey, watch out for Germany, Australia, Switzerland. Big reason banks and customers of those banks and those customers are losing is because countries are not exporting towards China. Like, our point is that they have been very, very sluggish on their economic recovery that we've been talking about. And that's just, so my perspective to talk to you about was going to be, hey, let's just avoid kind of these big holes in the ground, these big potholes. Let's try to stay away. But after talking to you this morning, it's not going to be that easy to avoid the downfall or these dominoes that fall over because of China.
No, and I'm going to throw some numbers at you. And guys, we all know about China. We all know it's bad. Kyle Bass, who I respect, has been talking about it for a while. What's different now, right? We know the real estate property bubble. We talk about, ghost towns and ghost cities and ghost provinces. Pretty much probably 7-8 years now. But why now? Like, why am I mentioning this now? If you look on July 4th, they defaulted on $1 trillion in U.S. bonds. Very few stories out there about it. And nobody really talks about it, right? People might be like, oh yeah, that's right. Well, nothing happened. Like, imagine if you defaulted on $1 trillion. $1 trillion. I mean, we only have what? With Nvidia, 5 companies maybe that traded $1 trillion valuation. Imagine one of those companies defaulting on their bonds and how big that was. I don't know how big the biggest bankruptcy is. I don't know if it's still Enron or whatever it was. Maybe a couple $100 billion. This is a massive story, right? And this is July 4th. So then we have a few days ago, we hear about Country Gardens, that it's delaying their payments on bonds, and that stock has been coming down tremendously. All right, fine. But has anyone looked at what is actually going on? Look at the numbers. They reported $7 billion in losses in the first 6 months. It owes $4.3 billion in debt over the next 16 months, and that doesn't include $130 million interest payments for the rest of 2023. Yesterday, we saw Zhangzi Enterprise. This is basically called the China Blackstone, right? Because the country's largest asset management group just missed payments on several investments. Imagine if BlackRock did that here. What would happen? Okay. Now, what's scary to me is the timeline. So The timeline that this happened and why did it happen July 4th and it didn't happen in a few weeks and now it just recently happened, here's why. It's the yuan. The yuan is absolutely crashing. So it fell sharply on July 4th to near 16-year lows, right? And then when the yuan crashes and you have your dollar-denominated debt, you're going to default on that, right? Think about, a good example for U.S. is the euro, how the euro used to trade much, much higher. I remember athletes wanted to get paid in euros and whatever. It's like $1.30, whatever it was. So if you're selling to that market, that's great, right? I mean, it's awesome, right? You're producing goods here which are cheap, which China's used to doing. So China usually controls the yuan and keeps it low on purpose. And it used to keep it low on purpose, but that's okay. So when your currency is crashing, it's a sign that, oh my God, there's something wrong with the economy. But they used to do it intentionally. That's what Trump argued about and everything. They're manipulating the currency because it provides a better environment. And whenever they wanted to get it back up, they were able to, just get it back up, and it wasn't too hard in certain measures. It's different this time around because in July 4th, it crashed 16 years low. It bounced back a little bit, but that caused a $1 trillion in defaults. Started to push high the next couple of weeks, but now it's surpassed those weak levels again, and this is recently, which led to Country Gardens and Zhangzi announcements. So if the yuan continues to slide further, which is almost a certainty, you have to look out. Now, quick history here. In the past, I mentioned China always wants to keep their currency weak compared to the dollar, right? And those reasons are obvious. We all talked about them, right? But every time they need to prop up its currency, it will lower their reserve requirements for banks to sell US dollars and buy yuan, right? So some of those reserves. China is in dire need of the yuan going higher right now. And the problem is they're having trouble getting it to go higher. And it's in free fall and they don't know what to do. Everybody thought the reopening, right? And by the way, when you talk about Starbucks and same store sales, they're comparing same store sales from this time, from last year when it was completely closed and you weren't allowed to actually go into the building. Now you're allowed to, so your same store sales better be fucking better, right? So be careful when you're saying, hey, from last year, it's definitely better. It has to be better. Your store had a lock on it. You couldn't get in it, right? It has to be better, right? If it's open and people can go in and out, if you do $1 in sales, it's better than last year. So be careful of the numbers when people say that, right? But this whole reopening, right? How positive. Oh, CNBC, the positive reopening. They reopen. And you know what? That catalyst has passed and the yuan's not going higher. So then China already lowered the rate of financial exchange reserves, right? Their institutions was holding their balance sheets. They did it twice. They did it in April 2022 because they're aware like higher interest rates of the U.S. are definitely going to hurt them. They hurt everybody else around the country. So they lowered from 9% to 8%. Again, this is the financial exchange reserves. Very, very important because they did it again in September 2022, and then it got serious. It went from that 8% level to 6%. That hasn't worked to prop up the yuan. Now it just announced a surprise rate cut out of nowhere, right? Again, if it's a surprise cut, there's a reason for it. It's a dire situation. It's like, holy shit, right? So they're going to have no choice but to cut this ratio again. And those foreign exchange reserves are basically your safe haven as a country, right? China's safe haven. And they're depleting them to try to come and buy the yuan and keep that yuan higher. But they're running out of measures to do this. And you might say, well, don't worry. I keep hearing this argument, Daniel. I keep hearing, and I actually talked to Kramer yesterday too, and I sent him this thesis as well. And he said the same thing. He said, it's a communist nation. They're going to do everything they can. They'll lock up the rich people or whatever. And they'll whatever. They could put every company out of business and make sure the bondholders in the U.S. get paid. So they're going to do something. They're not just going to sit by and let this happen. I hear that argument, but why? They're sitting back and letting it happen right now. Why haven't they done that yet? Because you're seeing these massive defaults. Remember when it comes to the foreign exchange reserve, which you have to remember, that's like the lifeline. That's a lifeline. That's safe haven. This is the same measure, right? This is what led to the Asian crisis. And this is like the late 1990s when Thailand sold off most of its reserve, that their currency was getting crushed. They tried to sell reserves to prop it up. I don't even know if I say it right. It's BHT bot, whatever it is. And it didn't work, right? And the currency got crushed, and people were like, okay, it's Thailand. There was contagion there, right? Because now you have Malaysia, Philippines, Indonesia. Their currencies got crushed. It filtered over to everything, including the U.S. The U.S. got nailed. When you're looking at China and their real estate, Daniel, their real estate is like their whole entire, is not their entire wealth. But in the U.S., it's around, I think it's a little bit lower than 50% when it comes to real estate, the average person of how much it's tied into their wealth. It's over 70% for China. Right, so their real estate is a lifeblood, right, and the industry. It's absolutely crashing, and the yuan's going lower, and they have a massive amount of debt, and these debt payments getting higher and higher, and they have nothing left to do unless they want to continue to sell their reserves. Again, once you're out of that, and they're down to 6% now. But real estate is tied to everything. And what else is real estate tied to? It's also tied to insurance. And what insurance companies do, they get this massive amount of money. Again, it's the biggest scam industry in the world in terms of it's the only business you have to pay up front for something that could happen later on in your life, right? So you're putting that money up front, which is awesome for them. So they take those pools of money and they invest them everywhere. Where they invest in, they're investing in real estate, they're investing in all these things. They're insuring a lot of this stuff. I have a picture here, guys, if you can see on YouTube, of the real estate and their exposure right here. And it's 22.5 trillion. If you're looking at their total insurance exposure. And you might say, okay, what does that actually mean in US dollars? That's $3.3 trillion, the insurance industry, right? Think about how AIG was providing all the protection for US banks. The US banks were late and they saw, oh my God, all this stuff is crashing, and they didn't provide a market for anyone who was short. They said, let us get out of this shit first. That's Wall Street for you, great. They got out and they said, let's see if there's someone stupid enough to actually cover us. And AIG said, raise their hand and said, we're the idiots. It's awesome. We'll take it all. They took it all. And then what happened? When the system collapsed, AIG was sitting there, but when AIG collapses, they can't fulfill all the short positions that all investment banks took, those reverse positions, after being long, all that shit and CDOs and stuff like that. And the whole system comes down. There was a bailout. This is not the US. This isn't something where your currency is backed by the full faith of the government, where you could spend as much as you can, you could do it. And in the US, it's the same situation. If it was real estate like that, it was collapsing, the biggest real estate firms were collapsing. They would bail it out and worry about inflation later, right? And again, it would lead to tons of consequences. What is China going to do to stimulate the yuan? Because everything that they have done so far has not worked. And if this continues to go lower, why does it have contagion all over it? Many reasons. I mean, first of all, India is doing pretty good right now. That's fine, right? They're growing their economy. They're trying to, Apple's trying to build manufacturing plants there and stuff like that. But they compete heavily with China in textiles, apparel, chemicals, metals. And when that currency goes down, again, that yuan goes down, it makes their margins get crushed. People are going to go to China because the goods are much more cheaper. Latin America, very closely tied to China commodities. We are very closely tied. If you don't think so, look at Apple's exposure. Look at all the chips exposure, NVIDIA's exposure to China. I mean, massive exposure, right? So, I mean, this is a serious problem that I haven't found an answer for. And when I started looking at the numbers, again, we've known this for a while. I don't think people know the story that I just told of how much is out there and why is the yuan, they're doing everything they can. People maybe be like, oh, it's not a big deal because they manipulate their currency and they intentionally kept the yuan lower, which didn't remove foreign investments because people they're just doing that on purpose. China's fine. They're going to be the biggest economy in the world and they're so big and all, the billions of people, whatever. Now you're going to see an exit of foreign capital. And even, who was it, Kyle Bass, you said? When I mentioned this to you, somebody tried to get their money out of China?
No, it wasn't Kyle. I doubt if Kyle Bass has any money over there.
Yeah,
but it was a hedge fund guy who was already talking about
trying to get the money out. So basically, they'll freeze the assets, not let them out. All right, fine. You're keeping the assets there. They're not going to get any new capital because people know it's an absolute shit show there. Even Bloomberg just started reporting on it. Bloomberg had the balls to say 4 months ago, after saying 9 months ago, the reopen in China is going to be amazing because it's going to spark inflation there. Right now, they're seeing massive deflation. And now they just said, this is, I think 2-3 months ago, they're like, China's seeing deflation and that's also good. That's going to be good. I love when both, it's like gold. Hey, inflation's going to be great for gold. Deflation's great. Everything's great for gold, but gold never moves up. So when I see a scenario like this, it doesn't mean to exit the US. It means you need to protect yourself and make sure you don't have that much China exposure. I know that the market, it just hit a 52-week low, but it's not, again, it has been pretty weak for most part of the year. We're expecting this reopen. It's open. Okay, this is an economy that's horrible. We do know it's a communist country. They're going to try to do everything. The fact that they've been trying to do things and they haven't worked, I don't know what else is left to prop this up, but I do know no matter what they do, and even in the Jim Cramer scenario, when we went back and forth, he's like, they'll do this, and they'll arrest, and what was it? You mentioned Jack Ma, right?
Yeah. Yeah, he did. He just disappeared for months.
Yeah, this is this is the face of China
scary.
Business, right? For Valley Buy, and he came back and we just he was like lost weight and stuff.
Yeah,
like that.
It's the same.
He's like, everything's fun. Where'd you go? I was just gone for a little while. But that's fun. But you know what it does? It's what happens if you're a business, if you're doing business over there, and a lot of exposure. Our chip companies have massive Taiwan Semiconductor. We have massive exposure to China when it comes to, rare earth metals, right? So when it comes to a lot of the chips that are produced, this whole AI revolution, it's tied into China. So you have to look at these statistics. It doesn't mean that you have to get out of everything in the U.S. There's still going to be things that work in the U.S. The U.S. economy is going to be stronger than other places. This is a big deal. And I challenge you out there. Let me know, because everyone says the same thing. Oh, China's they're not going to sit back and do nothing. They're not. But so far, they haven't sat back and done nothing. They've done a lot. They lowered those reserves a ton. They've lowered rates. They're trying to lower taxes. They've been trying to stimulate the economy, and the yuan keeps crashing. Okay. And if that happens, it's going to be very, very, very scary, and it's going to have lots of impact to other countries. Be careful. I mean, when I looked at these numbers, I was like, holy shit, we're talking trillions and trillions and trillions and trillions of dollars. And remember, this is supposedly the growth engine of the world that shut off, right? The growth engine of the world that everybody wants to go into. And if that shut off, especially where our technology companies are the industry leaders in stock pricing, not in earnings, outside of Nvidia, who's going to report, we'll get to that in a minute. This is a pretty scary situation I think you really need to pay attention to, and you're going to see me talk about it a little bit more. But there are ways to short China where you're not actually shorting it. There's going to be measures that the government does where you might see fluctuations and it might go a little bit higher. I would use that to buy inverse ETFs. You might see those show up in our portfolio. I'd reduce exposure. Tesla is going to be in a shitload of trouble. They lowered prices again because, just to compete with other China companies who are making cheaper cars with them. You're looking at, you don't want to see a company with a massive, sky high valuation, lowering prices and margins are crushed. That doesn't make sense. That you don't deserve a premium. You deserve a premium if your company's growing, if it's better than, and they are better, but you're seeing companies like Rivian catch up. A lot of Chinese companies are doing well. But when you continue to lower prices and you're trading at this massive premium and, again, in a market in China that doesn't look really good right now, I mean, that's a name I would be really, really worried about, as well as Qualcomm, which, again, that management team has been absolutely horrible. That was one in our portfolio. We got hit a little bit, but, early on, we haven't been in it for a while, but Qualcomm is just, again, they just came out with another weak quarter. There's a lot of companies with a lot of exposure there. Just be very careful. You might not see it with the wins because people are going to gamble no matter what in Las Vegas Sands and maybe a little bit with the hotels, in terms of traveling to certain areas. But be very, very careful of China because this real estate market, if I had to guess, it's in probably the second inning. Right? It's in the second inning. You're going to see if the yuan keeps coming down, you're going to see more and more and more defaults. How long before the U.S. ignores $1 trillion in defaults? What are we doing? Do we not care? Are we not mentioning this? Are we not talking about it? This isn't even a story on CNBC. $1 trillion in defaults. And we're not even talking about Evergrande. We're not talking about Country Gardens. We're not talking about the China Blackstone. We're not even talking about these names. These are the biggest companies in China that are defaulting, the industry leaders that are defaulting on their paper. And I don't see it getting better unless they prop up the yuan and do something for the economy. I just don't know what that is. I don't know what China has in its arsenal. We know we have in our arsenal what we could do, and we've done a lot. I don't know what China has right now because everything that they've thrown at this problem has not worked. And now the surprise rate cut, okay, for a second it worked. That's not going to work either. So just be very careful having exposure to China and having a bullish thesis on China.
Just a couple things there on China. I agree with you that it's an absolute crazy show. This should not shock anybody. The numbers, the idea to bring it to your attention is a great idea, and you should know what's going on there. However, and Frank, I'm not putting this argument on you. If any business leader from Tesla to Apple to anybody with a brain in their head that God gave them is shocked that this communist regime is about to fall apart, that's built on a house of cards, a house of sand, that's going to have trouble, I don't know what to tell you about that, if you're genuinely shocked about that. The other idea here is, what are they going to do? We don't know exactly when or what they're going to do, but we know the arsenal because there's only so many options. This is the great thing about politics, about taking over the world, about whatever. There's only so many options here, Frank. Capitalism, low taxes, stuff like that. That's not any new idea. These are all been tried and tested and wonderful. So that's good. What are they going to do? Well, they're probably going to try to, let's step back really quickly. During COVID, what did we do that China didn't do during lockdowns? We printed money and gave it to everybody and individuals and let them shop. And as soon as we lifted the authoritarian ties of, the boot off the neck and letting you actually go outside and be free again, then you had money in your pocket to burn. China didn't do that. So what are they doing now? Well, now they're kicking around the idea to do helicopter money. They're going to print money, give it to their individuals, spur the economy. I continue to think this is an absolute trading around vehicle. I wouldn't commit long term. It still baffles me to town and back, Frank, that smart guys like Charlie Munger and other hedge fund guys pile into Alibaba and JD.com and all that. They obviously have better contacts and know a lot more than me. I just don't understand how you invest in that kind of regime long term and sleep at night and expect to grow your capital when it's an absolute fixed game. And as long as the fix is in, that's great. But to your point, you can't control 1 billion people. You're not the Chinese, you're not the growth engine of the world. You have to quit. Frank, what if we were just to our investors or whoever, hey, we don't like our results anymore, so we're not going to tell you about them. Youth unemployment's unemployment's at a new time high. All right, well, we'll just quit reporting it.
That's great.
Well, don't laugh, because I'll take you out back and, we'll kidnap you. We'll go Jack Ma. It's terrible. It's crazy. If you can't smile about it, you go insane. But yeah, it's going to be volatile. What makes me nervous is, because it hurts our thesis, is if they get crazy and start doing capital controls, which I don't know how they don't, the U.S. dollar is probably going to go up in the short term, because if you're fleeing currencies, you can only go so many places, and you got to run to the strongest military power. Forget the taxing power. It's not about that. It's about the military.
Yeah. And even the whole de-dollarization thing, I hate the argument because, and I've been talking, I think it's Santiago Capital. I like that guy over there, but he's just on this thing like, it's never going to replace. We're not talking about that. I mean, he brought up a whole scenario how in order for you to have de-dollarization, you have to have deflation of everybody else. And when you have deflation of everybody else, what are they going to do? They're going to... it's going to make the dollar go higher, and of course you'll have inflation and wherever, but it's going to make the dollar actually go higher. And it wasn't this, like on paper, that's what it looks like. I mean, but if you really look at the details and you look at the actual numbers, the U.S. dollar in terms of the total, right, of global currency, right, it was in 1999, it was, I think, 71%, and right now it's 58%. Okay, that's a big difference, right? So you're seeing fewer companies around the world use the dollar. And this is why this meeting coming up I think it's next week. How many countries is it now? I think it's over 30 that attend, the BRICS nations and stuff like that, talking about de-dollarization and stuff like that. So it's not that the dollar's not going to exist anymore, but they need to win themselves off the dollar because, being on the SWIFT system and being in total control of the U.S. and seeing what's going on in the Ukraine is crazy. Right, we're defending a country that we said that there's a couple of years ago that we hated, that we said there's no way they're ever getting into NATO because it's a corrupt nation and we will never do that. Not to mention the reason why NATO was created, we said we'd never go, to the Western area and put our stuff right on other people's borders, especially nuclear power. That's like Russia coming here to Mexico and saying, hey, we're going to sign agreements and they're going to be, we're going to be partnering with Canada and Mexico. We would say, F you, there's absolutely no way it's going to happen, right? So it's almost like we're provoking Russia, right? But now all of a sudden we love them and we took Russia, pressing a button off the SWIFT system, which can destroy an economy, right? So, that whole de-dollarization, it's happening. It doesn't mean that the U.S. dollar is not going to go higher in some times or whatever, but you're right, it could go higher here, but it's pretty crazy scenario. And you said something really quick to end, and I don't want to get, make this whole China podcast, but you said something interesting where this shouldn't surprise anyone. This surprised the shit out of me when I started looking at the numbers, right? And I follow this stuff. I knew how big China was.
Hey, communism isn't a great way to run. That's my macro.
I did not know when I started digging that not only is the yuan coming down and you look at it and again, it's not a top story in CNBC. Nobody really cares about it. This is a massive, massive deal. This is going to have significant consequences globally. Because my job right now is to look at when you raise rates by 6,000% in a year, right? It's going to break shit. And if you can predict what's going to break, you're going to be fine because you see it coming and you could adjust. That doesn't crash markets ever, okay? It doesn't crash markets ever. What crashes markets is a surprise. What's the surprise? You can't tell me across the world there's not going to be any surprises and everybody's going to be okay. This is a surprise, I think, that a lot of people aren't expecting. It's going to result in much, much slower growth. It's going to impact Europe. It will come back to the US. This is like contagion fear. This is something that could really, really result in the markets coming down a lot, which I think all of us and anyone that has a history of the market is very surprised it hasn't come down because we never see multiple expansion when we see an earnings recession and we see interest rates go higher than the fastest pace than we've ever seen in the Fed era. We've never seen that, right, with interest rates 22. Usually you see multiples contract in that kind of environment. You don't see them expand. So, what's the damage? What could happen? I think you're going to see a shift out of a lot of technology. Who was it that took the guy from The Big Short? Michael Burry, I think his name is. Burry. What is it? 90% of his portfolio or something? He's shorting the largest technology companies, NASDAQ 100. 95% of his portfolio, they just recently is short positions. I'm not saying it's going to happen, and he was really wrong probably for the first year and almost lost his job. And again, it was a nightmare and nobody, again. But to see where we are right now at these levels and these valuations, where interest rates are and earnings not growing that fast, and now we throw in and we just turned off the biggest growth engine of the world, and it's much worse than we expect. Just be careful out there, guys. Look, you got to be careful. That's why I say it's one of the most dangerous markets, because it almost forces you to be in it because it's going higher outside the past couple of weeks. But this leads into, one of the companies that had the biggest exposure to China, who said we have nothing to worry about. We have absolutely zero to worry about, and that's Nvidia. And Nvidia, if you look at Nvidia, they're going to report. When are they reporting, Daniel?
Briefing has it as next week, the 23rd. So what is that, Wednesday?
So Wednesday on the 23rd.
After the market, it says.
Have you noticed how many companies have upgraded? Like, I feel like every time I'm putting on CNBC, it's another company. It's Morgan Stanley names it the top pick. UBS calls them the kingmaker in AI. Everyone's raising their estimates. I always think it's funny when someone's bullish on something that have a buy rating on it, and they say, well, we're going to reiterate. We reiterate our buy rate. We're reiterating it. And you have a buy rating. I get it. No. We have a really big buy rating on it, right? So I'm just going to tell you, going into this quarter, we saw Nvidia fall. A lot of AI stocks have fallen over the past few weeks, but Nvidia bounced back because a lot of these firms have been defending it. Raising their estimates into the quarter, which means that they've been talking to management, right? Because you're going to lose your job. If Nvidia comes out and says, again, they went from 7 to 11 billion, which is something I've never seen in the history. I've been doing this for 30 years. I've never seen that big of a raise, and good for them. They deserved it, and I was wrong on my call. I just thought that, you have to be careful going in, since the stock was up, 150% into the quarter. And, I was like, they're going to have to really produce numbers that I didn't think they were able to produce, and they did. So I was wrong on that. And again, that's on me. Going into this quarter now, all these estimates are sky high. I mean, they're expecting earnings of over $2. That's over a 300% increase year over year.
What's revenue? 11 and change now?
11 and change. They're going to easily. They better report 12 and change or plus.
You think.
They better report that, right? And a lot of these guys got to look at the number, right? So they talk to management, because you're not going to lose your job and say something stupid and say, this is my top pick, and a week later it crashes 30%, because that analyst loses his job immediately, right? You got to know. My questions is, how are you going to increase your supply chain to meet this demand when Taiwan Semi is close to full capacity? They're saying their lead times on chips are out 6 to 9 months. To me, I think that's a big deal, considering you're talking about a company that's making 70% margins on chips. This used to be a commoditized business. So Ford and GM and everyone that needs chips and everything, they would go out and say, okay, this is what we need, guys. Who wants to supply it? And 20 people would bid, and it's a commoditized product, a lot of these chips. This isn't. And these are, the main AI chips everyone's using. So 70% margins. If you have an industry or you run a business with 70% margins, you better be innovating like crazy, because the world is coming after you. And the problem is, the world in their industry includes Google, Amazon, Meta, and Microsoft, who spend tens of billions of dollars every year on CapEx. They're all developing their own AI chips, along with AMD, along with Intel. We know Intel has been terrible, but maybe Intel, listen, if I'm an Intel investor, I would love to invest in Intel if they said, listen, we are going 100% AI or going bankrupt. That's a buy to me. That's what I want Intel to do, because I hate you if you're not in AI, because you're so terrible. You've been late to every freaking trend. Your management has been terrible. You've burned so many investors. You've been horrible. Tell me that. Say, this is what we're doing. We're going all in. We're going to poach everyone we possibly can in this industry. We're going to overpay for everything. We're going 100% AI no matter what. It's AI or death. That would be the best bullish. I mean, investors, I think, will love that, because that's what you want out of Intel right now. But they're getting in it. And remember, they've been so wrong in so many other spaces. It's going to pay if they happen to be right here. Also, they have massive exposure to China, which is in terrible shape right now. So, and again, China may do something stupid or whatever to try to inflate their economy. I don't know. But Nvidia said, well, we have nothing to worry about. So their average target price is a little over 500. It's about 13% higher. You'd think it'd be more than that with all the upgrades and everything. They better report insane numbers and insane guidance. I'm expecting that. I think the stock might hit 500 and go up to those levels. And then when analysts raise their estimates, I think that's going to be one of the best shorts that you'll ever see in your life. There's just too much risk over the 12-month outlook for that company, where you have the biggest guys in the world that are all coming in. It is a massive industry. I'm a believer in AI. This company is trading at perfection, and it's not perfect. There's a lot of things that could go wrong with this company, and there's a lot of competition coming into the space. Not to mention just, hey, you know what? A global slowdown in terms of cyclicality, which means a lot of these companies may cut spending a little bit, right? So, for me, I think they're going to blow out the numbers. They better blow out the numbers. I think you're going to see the stock, go back and forth and then rise and then probably go up to 500. You'll see all the analysts like pat themselves on the back. And I think that's going to be the ultimate top for the company because there is a lot of competition coming to the space. But, what are your thoughts on this with Nvidia? They're going to be reporting and it's a big story. Again, I think short term, the stock's going to go high. The numbers are going to be great.
Yeah, since I'm not in it, this is easy. This is a beat and raise, and the stock will go up at least 10 to 15% afterwards because I'm not in it. Everybody that is in it, I promise I will not get in it before next week, so you guys can all enjoy.
Damn.
To your point, I mean, we were talking earlier, and there's been a few hedge funds, and there's some sayings out there that, hey, and I know the AI bubble, quote unquote, however you want to talk about it, has been going on for a while, or like you said, all year. It just... When everybody's talking about, I just couldn't believe the latest results they had. To your point, when they were expecting 7 or 8 billion and came out with 11, it was absolutely incredible.
It was amazing.
And now you're getting headlines about Saudi Arabia's standing in line as everybody else is buying all these chips. To your point, I don't know how they just don't blow out the numbers. I think it'll be a lap, but yeah, I mean, it's just emotionally, I can't touch it now. It would be a pure gamble. And when it's a pure gamble, I would rather go to Vegas.
And how do they produce them, right? I mean, we saw massive demand out of the auto industry, right, during COVID. And they just couldn't produce the cars. Supply chains weren't there. The supply chains aren't there for that kind of massive demand. So it's great to see that demand. But where's the capacity at? Because, those lead times, 6 to 9 months, that's light years right now when it comes to being first in AI. So people are looking for alternatives. What are the alternatives? And not everyone at NVIDIA is making a fortune, and you probably got a great, unbelievable teams there that are going to get poached. They're going to go elsewhere because you have deep pockets there in that industry making their own chips. These are companies that are software companies and search companies and Amazon. They're making their own. That's what you have is 70% margins because they can make chips within their own AI systems that's going to power their own AI system. And it's also the software behind it. Again, NVIDIA is killing it, is absolutely killing it. I'm not taking anything away from them. But a lot of competition's coming, and this stock is trading as there's no competition, everything's fine, they're the industry leader, but also be careful because they have to fulfill those orders. And I hate the fact that they just came on and said, China is not a risk at all to us. I mean, I hate when companies just say, listen, it's very small or we really don't see it or, we're dealing with it and we're ahead of it and we're fine and we knew this is coming. When you say it's zero, it has nothing, that bothers me, especially when a lot of your business is tied there. So let's see what happens with
they get 20% of their revenues from China. So
yeah, and manufacturing capacity and everything. I mean, look what they're doing with their chips. I mean, it's massive. So, let's see what happens in the NVIDIA report next week, but we're going to be back tomorrow, right, Daniel?
Yep. Wall Street Unplugged Premium. Cheap, but it ain't free.
We're going to talk more about the international markets, right, which is going to be pretty cool. We'll talk about oil as well, right, because we saw with India, right? Interesting with oil.
Yep. Trade settlement, not in U.S. dollars. That fits to the thesis, absolutely.
Which is really cool. So,
and 13Fs, we get to go through those.
13Fs
See what the biggest and richest are buying and selling.
Yes, absolutely. So, a lot to talk about tomorrow. So, we'll be back with Wall Street Unplugged. It's nice to be back in the saddle, guys. Again, thank you for all your warm wishes and stuff like that. I appreciate it. But no worries about me. No worries about. Don't send any emails about my hip anymore. I'm 100%. Just assume that I'm good. I'm fine. I'm back in the saddle, and it's nice to be here. So I appreciate all those emails. Daniel, if anyone wants to get in touch with you, how do you do it?
Daniel at CurzioResearch.com.
And for me, it's Frank at CurzioResearch.com. So that's it for us, and I'll see you guys tomorrow. Take care.